Good morning and happy Tuesday, y'all. Welcome to another Tuesday. Give me a moment to share the live to a couple Facebook communities. And as I'm doing that, go ahead and share the live also. We're back for another Tax Talk Tuesday. We are here every Tuesday at 7 a.m. Central Standard Time, and I'm bringing you a business, a tax, or a finance topic each week that we're here. So give me a moment. Let me share this live to a couple of groups here and we will get started. All right, so here we go. So today's topic, we're going to talk about the difference between filing a tax return and the difference between actually paying your taxes. And the reason why we're talking about this topic on today is because the question was raised. I had a couple questions raised after I sent an email yesterday reminding my email subscribers, my email community that your estimated tax payments was due yesterday. And it also was the deadline for the filing your tax return for if you have an S corp or a partnership. And I was getting questions about, well, do I have to? Am I supposed to pay taxes? Aren't you supposed to file my taxes? And these were people who were not S corps or partnerships, and so there's a lot of confusion out there as it relates to being a business owner, as it relates to paying taxes, filing taxes, and I want to clear that up on today. And before I clear that up on today, let me go ahead and introduce you to who I am. I am Chastity Grady at Grady Tax Plus. It is my number one goal to make sure that we are keeping the IRS out of your pockets. Okay, that's my number one goal, to make sure that we are keeping the IRS out of your pockets so that you can live a better life. Why? Because you deserve it. And so one of the ways that we do that is making sure that we're providing the education that you need so that you can make informed decisions about your tax situation, whatever is going on with you, accurately filing and preparing your tax returns, making sure your business finances are organized the right way. And if the IRS were knocking on your door, we're there as your tax representative to help you out. Okay, so the difference between filing a tax return and paying taxes, okay? And this has to do with when it comes to quarterly tax payments, estimated tax payments. For some reason, many of you believe that number one, that paying estimated tax payments means that you're supposed to file your taxes every quarter, okay? And that is not true. So let me break down the entities first before I get into what your responsibilities are, because a lot of times you're confused because you don't understand your entity structure. You don't understand the structure of your business and how your business is ran. So I'm going to get into the most popular one and then I'll break down a couple others. So the most popular structure that we see that people have is if you're a sole proprietor, you have a DBA, you're an independent contractor, you do contract work on the side. Maybe you're not in business full time, you're just in business part time, or even if you're in business full time but you're not an S corp or a C corp, you are filing your tax return once a year. Okay? Everybody really is filing their tax return only once a year. Okay? You only file. When I say file, this means that I'm actually bringing to the IRS all of my income, all of my expenses, all of my credits that I qualify for, all of my tax deductions, all of the things. You are only doing that once a year, okay? And depending on whether you file an extension or not will determine if you get to file your taxes later than the regular deadline, which is for most people April 15th. Okay. Now, as I mentioned before, the most popular type of business structure is if you're an independent contractor, sole proprietor, you're a DBA, gig work, doing things on the side, right? Not a S corp or a C corp or even a partnership for that matter. Then your tax return deadline is always going to be April 15th. You only filed your return one time with your personal return. There's no separation, okay? The IRS does not consider you being a separate entity if you do not have a C Corp partnership or S Corp tax entity structure, okay? So with that said, there's no separate business tax return. So I hear this often, oh, I filed my personal return, but I didn't file my business return. But if you're not structured as a S corp or a C corp or a partnership, then there's no separate return. It gets added with your personal return. There's a Schedule C that gets added to your personal return that gets filed on the one return. And this is why I talk to y'all early on in my Tax Talk Tuesdays about understanding small business taxes, understanding small business finances, because we need to understand the accounting language. We need to understand the language of business. And many of you want to disregard understanding the language of business, but you disregarding that is leaving you in confusion. And you don't want to operate your business being confused, because that restricts you on the money that you want to make in your business. That restricts you on showing up in your business. You need to be knowledgeable in these areas so that you can show up confidently, knowing that all areas are covered. You got the expertise for what you're doing, you got the knowledge, and you got the skill, but you need to also have a little bit of knowledge when it comes to the business language in the business world, right? Because you're in this world now. If you don't want to learn anything about the business language or accounting language, then I'm going to suggest that you exit the business world. And the reason why I suggest that, because you are doing yourself a disservice when you don't learn these things, right? Because when you don't learn these things, you end up what people like to say IRS jail. You end up in IRS trouble, or your business is all over the place, and that's not a way to operate a business. And so I'm being direct with you because I want to encourage you that everybody who's considered themselves to be in business, everybody who's considered themselves to be an independent contractor, the IRS still considers you to be a business. That's up to you to decide how you're going to operate and have the mindset regarding it, right? That's up to you to decide. So if you're doing things on the side or whatever it is, even if it's part time, you are still a business owner. You are still a business owner. The IRS considers you a business owner, and it's up to you to treat yourself as such. It's up to you. So I'll leave that to you. But along the lines of the tax return, if you're a sole proprietor, DBA, single member LLC, meaning it's just you on the business as the owner, you are filing your tax return with your personal return, which is only filed once a year. Okay. Now, if you're an S corp, if you're a partnership, you have a different tax return deadline. Yours is typically, or not typically, it is always March 15th. Okay, it's always March 15th. Now, when it comes to that deadline, you can get an extension, which would have been up until yesterday, which was September the 15th. All right. Now, when it comes to understanding taxes, let me talk to the S corps and partnerships for a second. When it comes to understanding taxes from a S corp and a partnership standpoint, I hear this often as well. Well, what business taxes am I supposed to pay? As an S corp and as a partnership, you don't pay typically a separate business tax. Now, if you have employees, then, or if you're an employee under the S corp, which you should be, you have your payroll taxes, but that has nothing to do with the taxes on the net profit. You're only paying taxes on the wages that is being paid out. That's a whole separate thing. That has nothing to do with the taxes the IRS is expecting from that net profit. And so I hear oftentimes when people are like, oh, I got to pay my business taxes. There's no business tax. Okay, there's payroll taxes, and you still are subject to, like everybody else, paying estimated tax payments on the net profit, but that is passed on to your personal tax return. So when you become an S corp, when you become a partnership, you're responsible for filing two tax returns now. You have a separate one for the business. Even though you have a separate one for the business, there's no separate tax. There's just a separate tax return. Okay? Let me say that again. When you're an S corp, when you're a partnership, there's no separate tax. There's no separate income tax. There's only a separate tax return. As a result of filing that separate tax return, you get a Schedule K1. That K1 gets passed down to your personal tax return. So that's why you have to file two, one for the business, one for the personal. And so if my business has a separate return but doesn't have a separate tax, in my K1, when I get my Schedule K1 and that's going to be filed on my personal tax return, that means that I'm paying a personal tax. It's not a business tax, it's a personal tax. And so that means that I am still subject to paying estimated tax payments as an individual. If I'm filing a personal tax return, if my Schedule C is attached, which is for the first example we gave, if you're a sole proprietor, DBA, have an LLC but it's not an S corp or a partnership, that is filed with your personal return, which means it's a personal tax. The reason why I'm stressing and emphasizing this is because I hear people say, okay, when I pay estimated tax payments, do I select individual or do I select business? When you know the structure, then you know how to pay. You know where the money is going. So if I am paying estimated tax payments, if I file a personal tax return, if my business if income and expenses are being filed on a personal tax return, I am paying a personal tax. That means that's individual. Okay? That means that's individual. And then if I'm an S corp or a partnership, that return does not yield a tax for me to pay. If you've ever filed your business return as a S corp or a partnership, it doesn't yield. Thank you for the gift on TikTok. It doesn't yield a business tax that gets passed on to your personal, which means it's a personal tax, which means it's an individual tax. The only business entity structure that has a true business tax, which is the one that people like to run away from, is a C corporation. Only C corporations have a separate business tax, meaning when the C corporation files that tax return for the C corp, it actually has a tax that it's supposed to pay with that return. That's the only entity that will actually have a business tax that will actually select paying business estimated tax payments. That's the only one. There's no other one. There's no other entity, not an S corp, not a partnership, and not your LLC. Okay? So let's clear the air. You do not have a business tax if you are not a C corporation. Okay? No business tax. You have a personal tax. Now, within your personal tax, it makes up what we call self employed taxes, which is synonymous to Social Security and Medicare. Social Security and Medicare is a what? A personal tax. Businesses don't have business when you give away that business a C corporation, they don't have a you can't draw from a Social Security or Medicare check, or not a Medicare check, but like the Medicare insurance or a Social Security check as a business. You can't. That's on your Social Security number. So it's still a personal tax. We like to call it business and stuff like that just to make it sound good, but at the end of the day, it's personal. It's all personal. So when it's when we talk about filing the return, everybody is only filing a return one time. Whether it's by the deadline or not, you file the return one time. But when I think about paying taxes now I'm talking about I'm actually paying a tax. So if I'm paying a tax, but I only file a tax return once, then what is going on with the paying of the tax? The paying of the tax is if I'm in business for myself, independent contractor, whatever you want to consider yourself, at the end of the day, you're in business for yourself. If I'm in business for myself, I only pay, I only file my return once a year. I hear something about quarterly tax payments, estimated tax payments. What is going on with that? Is that a filing or not? It is not a filing, it's a payment. So what happens is the IRS says that if you're in business for yourself, if you're considered self-employed, whatever, however you want to call it, okay? Because we all give ourselves different names. But I'm gonna say, if you're in business for yourself, the IRS does not know what you're making during the year. They don't know that. They only know when people are on their job what they're making during the year, because the employer has to file quarterly payroll tax returns for that. They have to file that, which has nothing to do with your business. Okay? So, because IRS doesn't know what you're making during the year, they don't know what you're spending during the year, you are responsible for knowing that information. That's why I talked to y'all last week about understanding small business finances. The IRS says we are responsible for keeping track of our records, of our income and expenses, because that's what they're taxing us on, right? So that's why it's important that you know exactly what you're making, you know exactly what you're spending, Because when it's time to pay taxes, you need to know what you're basing that number on. So we have the 4 quarters, right? We know IRS 4 quarters. 4 quarters is not the same as a regular 4 quarter um, calendar year. They're not the same. They have like 3 months. It's like 3 months, then it's 2 months, then it's 3 months, then it's 4 months. Their quarters are off. Okay, but nevertheless, it's still 4 quarters. And so the IRS says that, okay, you need to know what you're making, know what you're spending, because I'm not going to know until you file that return that one time. And then I will know when how much I need to tax you, right? And to avoid being penalized for us not knowing what you were doing during the year, I want you to pay taxes quarterly. I need you to estimate. I need to estimate your taxes based off what you're making, based off what you're spending. I need you to estimate that and pay that in advance. So when it's time for you to file that one return, you either have already paid us, or we gotta owe you something back because you paid too much. You estimated, you overestimated, or if you paid us nothing, then we coming in hard. So that's what the estimated tax payments are for. The IRS doesn't know what you're making right now. They don't know what you've made this month thus far. They don't know until next year when the return is filed. They don't know that. So that's why you have to go in and say, okay, based off my bookkeeping, I'm going to pay this amount towards the balance that I may have when I file that one return. So, with that said, there's no filing of a tax return, there's no filing of paying a tax every quarter. It's simply a payment on your individual account. Okay? And I know it might sound like it's not as official, right? It doesn't sound official because you're in business for yourself, and you want to pay a business tax. But if you want to pay a business tax, then you need to become a C corp. That's the only one. Like I mentioned, that's the only one. If you want to pay a business tax, otherwise it's all personal. It's all personal taxes. And I don't want you to confuse having a personal tax liability. I don't want you to confuse that with you truly not being in business, because you are. You are truly in business, but how the IRS sees your business is different. And that's okay. That's why you got to know the system. That's why you have to know the types of structures. That's why you have to know these things, the business language. That's why you need to know that. So you know where you fall on the spectrum. Okay? So, yesterday was the filing deadline for people who were on extensions for your S Corp and partnership. Now, if you're on the extension for your personal return, that deadline is October 15th. Yes, you can file after the deadline, but you just have to know that you're going to be subject to penalties and interest if you owe the IRS. In November, typically before the week of Thanksgiving, that's when the IRS shuts down the e-file system, which means that if you wanted to file your tax return before the year is over, you don't have until December unless you are doing a paper return. Okay, unless you're doing a paper return. So I hope that clears that up. The difference between filing a tax return and paying taxes. Paying taxes, quarterly taxes, that's separate. We're not filing a return quarterly. That's too much. Who has time for that, right? If we were filing a tax return quarterly, then literally everybody would have bookkeeping, and everybody does it, right? So with that said, what I want you to take away with is that I need to understand my business structure. I need to understand how I am being taxed within my business structure. If I'm an S corp or if I'm a partnership, I don't actually have a business tax that I'm paying. That is passed down to my personal return, which is a personal, also known as an individual tax. That individual tax is a part of my Social Security, my Medicare, and my federal income taxes. If you live in a state, then you have a separate state tax. Okay? And so when I'm looking at paying estimated tax payments, I am paying that as an individual. I am paying that as an individual. And then if I am filing my return with my business information, my business income and expenses with my personal return on a Schedule C or E if you are in if you're in real estate. If I am doing it on those two forms, that is on my personal tax return, which means it's a personal tax, it's an individual tax. Okay. And so when I make my estimated tax payments, I'm only making it as an individual. I'm only making it as an individual. Okay. That's why you have those options to choose if it's on a 1040 for the type of tax form that it is. Actually, while I'm just talking about the type of tax form, let me pull up, I'm going to pull up an example. Actually, let's pull up an example. Give me a second. Estimated. Okay, here we go. I love this. Here we go. Okay, so when I look up how to pay an estimated tax payment as an individual versus business. So if I chose, let's say I chose business by mistake, and I go in here and I choose estimated tax payment. You can't see my screen. It's okay. This the types that it give you is if you're a corporation, as I mentioned, and some when you file a partnership tax return, depending on what kind of partnership is attached to that, you might have a tax that you're supposed to pay, but it's not common to everybody. So the only option that is giving you is if you're a corporation, which is a C corp, if you have a partnership that is subject to this estimated tax, and then if you have a private foundation, or if you have business income from a nonprofit. Those are only four options it gives you. So that right there lets you know that if even if I wanted to try to pay an estimated tax for business, I don't even have the option to, because I'm not a corporation. I don't have a private foundation. I don't have income, business income from a nonprofit, and I don't qualify for estimated taxes through the partnership. Then I don't have another option. So it's like you only are left with the individual as an option. So I'm going to go in here for make a payment, click estimated tax. And the only option there is if it's a 1040. And we already established that 1040 is your personal return. So that right there tells you, even if you try to pay, you don't even have the option to as for your business if you're just an LLC, independent contractor, S corporation. You don't even have the option to pay a business tax. Okay? All right. So I hope that makes sense to you. If you are someone who needs assistance with understanding your tax situation, understanding what you need to pay as a business owner when it comes to your taxes from a personal standpoint, I'm going to put in the comments on Facebook my calendar link so you can schedule a 30-minute strategy session with me so we can go over your business structure, so we can go over what it is that what are you responsible for when it comes to paying estimated tax payments. How much are you in a hole for the year if you haven't paid anything at all, or how far behind are you so you can catch up, okay? So I'm offering that. It's in the comments. So if you can schedule a consultation with me. If you are in need in filing your tax return, we are still filing tax returns, okay? We're year round. We don't stop, in the springtime after, once April 15 gets here. We are still filing your taxes, okay? I just completed two S corps and a partnership tax return yesterday. And so, like I said, we are still filing tax returns. I left my link in the comments for you if you want to go on my website to purchase your tax return. And we are also accepting new clients already for 2026. Okay, we're already accepting new clients for 2026 to make sure you are filing your taxes the right way. Okay, making sure that we're keeping the IRS out of your pockets as we are filing your tax return. So that link is in the comments as well to select your tax package. It's based on your tax situation. Okay, whatever you have going on personally, or if you are a business owner, I have both options available to you. Okay. So I hope you enjoyed today's live. I hope I cleared up some things for you. If you still have questions, please send me a message or just comment on the video, and I will make sure that I answer that question for you. But at the end of the day, for you, what you just need to take away with from this live is that if I'm not a C corporation, I don't have a business tax. So any tax that I pay is always going to be individual tax, unless it has to do specifically with payroll, which is still not income taxes. It's not based off your net profit. Okay, the IRS taxes us when it comes to income taxes, is taxing us off of our income, off of our net profit. And if I'm not a C Corp, I have no business tax. So every tax that I pay is always going to be individual taxes. It's always going to be personal. And if I'm not an S corp, and I'm not a partnership, and if I'm not a C corp, then anything that I'm doing business related, anything I'm doing on the side, and anything I'm doing as an independent contractor, that's always going to be filed with my personal tax return. There's no other tax form. There's no tax form for just an LLC. That doesn't exist. Okay? It gets filed with your personal return on a Schedule C or a Schedule E. Okay? So I hope that cleared it up. I will be back here next Tuesday for our Tax Talk Tuesday. I'm here every Tuesday at 7 a.m. Central Standard Time. If you are following my Fire Your Boss series, I will be back here Friday, September the 19th at 7 a.m. Central Standard Time, giving you the tools and resources that you need to fire your boss for good one day. Okay, if you are someone who wants to step into full-time entrepreneurship, if you want to make sure that your business can fully support you without looking back, without applying for another job, then you want to follow the Fire Your Boss series. We also have a Facebook community in there. So you can continue to get the support that you need. So I will be back. My next live is Friday at 7 a.m. Central. But as it relates to Tax Talk Tuesday, I will be back here next Tuesday at 7 a.m. Central Standard Time.